Hi, this is Shankar and welcome to Bulls Carter. In this edition, I am going to talk about rupee depreciation. So let me start with an example. One US dollar used to equal rupee 70 in 2019. Now, one US dollar is equal to rupee 78, which says that the rupee is now much weaker than what it used to be earlier. Rupee depreciation is a double-edged sword for RBA. A positive factor is that weaker rupee should give a boost to India's exports. But in the current situation where there is an environment of uncertainty and weak global demand, a fall in the value of rupee may not actually lead into higher exports. On the contrary, rupee depreciation poses risk of imported inflation and may make it difficult for the RBA to maintain interest rates at a low level for a longer period. India meets more than two-thirds of its oil requirements through imports and is also one of the top importers of edible oils in the world. A weaker currency will further escalate prices of imported crude, energy and edible oil and lead to higher inflation. So now let me take you through the various reasons for the current rupee depreciation. So the weak economic data around the world, especially in China, has put pressure on the dollar index, which hit a nearly two-decade high. Domestically, a sell-off in the global equity markets, which was triggered by the hike in interest rates by the US Federal Reserve and the geopolitical tensions in Europe, has led to the current rupee depreciation. The outflow of dollars as a result of high crude prices in the global market, along with the curb in edible oil exports by the Asian countries, has resulted in widening current account deficit, which is also adding our currency to depreciate. Furthermore, the steps taken by the RBA to tighten the monetary policy to counter rising inflation has also led to rupee depreciation. So how does the rupee depreciation affect the overall economy? The current account deficit is bound to widen, depleting the foreign exchange reserves and weakening the rupee. Rupee depreciation against the dollar keeps imports bills higher, pushing inflation even higher from the current levels. Higher inflation is harmful to the overall economy. The companies may not be allowed to fully pass on the burden of high costs to consumers, which in turn affects corporate earnings, government dividend earnings, etc. If the rupee does not strengthen, FPI outflows will continue, which is another negative factor for the market. A strong dollar is good for export-oriented companies like information technology, but bad for import-oriented industries like oil, gas and chemicals. It is also bad for companies with franchise which pay royalties for their foreign parent companies. So how will the rupee depreciation affect a common man? With the dip in rupee, importing items will get more expensive, oil imports gets costlier, which can directly impact consumers. Additionally, other imported items as well as components are also likely to get costlier. Foreign education and holiday travels will also get more expensive. There is likely to be an indirect impact on loans. Now with rising inflation, already RBA has increased the interest rates by 90 bips to currently 4.9%. High repo rates means banks increase their lending rates, making EMIs costlier. Rupee depreciation is also the effect of foreign investors pulling out of Indian equities. This means that there could be a sharp fall likely in equity markets, resulting in a decline in stocks and equity mutual fund investments. Already, this scenario is clearly visible since October 2021 when FII started to sell aggressively. So at this juncture, what is the way out? The central bank can release dollars to bring volatility in control. But the forex reserves has fallen below $600 billion for the first time in a year. In 2022, forex has depleted by $36 billion. We have to wait for the RBA's move to deal with the situation, as they are the better decision makers than anybody else in the country. We should also note that India is in a far better place compared to its Asian peers. in terms of managing the currency movement and the forex reserves. With this, let me conclude the today's talk on rupee depreciation. Thank you.
I hope I have given you a few insights with regards to the rupee depreciation and its effect. As the markets are steeply down from its recent highs, most of the investors are expecting a point to re-enter the market but confused which stocks to prefer for investment, either dividend yielding companies or the companies focusing on growth. In my next video, I will be covering a detailed explanation on how to go about picking companies that gives dividend or focus growth.